to a new video. For today's video, I'm going to be covering how to utilize time frame alignment. Time frame alignment is a thing that I personally use every single day in the markets, getting my daily bias and then looking for entries correlating to my bias. So this is a very important concept. My students that have been struggling just didn't really understand how to utilize time frame alignment, and once I taught them how to use it, that's when they started seeing results. So I think this is a very important concept, and today I'm going to be covering how you can use this yourself. So getting one thing out of the way, one of the most important things to know: the higher the time frame, the higher the power. So for instance, if we see right here, the higher time frame is tapping into a weekly gap. As you can see, we've got our weekly gap right here. We get this candle here coming lower to take out this weekly gap. And then on the daily, we have a daily fair value gap here, which is more likely to be respected. It's more likely to be the weekly fair value gap, as that is holding higher power. And as you can see, as soon as price delivers out this weekly, we invalidate this daily gap. So today I'm going to be teaching how you can use this with context to capitalize in the markets. I will be starting on the weekly time frame, going all the way down to the 1 minute, and showing you how you can use bias for trades. So right here, this is a perfect demonstration of the higher time frame holding higher power. If we're seeing bullish confluences on the daily time frame, the weekly time frame, and the 4-hour time frame, and we're going to be trusting those more than the lower time frames. So with that out of the way, let's hop straight into this video. So what do I look for on the weekly time frames? Now, the weekly time frames, I am looking for closes. So I'm looking to see how the previous weeks closed, respecting, disrespecting any other PDRAs or zones of liquidity. So as you can see right here, for instance, we have this doji candle. Now, what is a doji candle? So a doji candle is simply a candle with a big wick and a very small body. So it can look something like this. As you can see right here, we have one right here. I'm going to get into this in a moment. Or it can even look something like this. Just a very small body in comparison to the wick. So as you can see right here, we have our doji candle. Now, what did our doji candle do? Our doji candle closed sweeping external range liquidity, being this high. So now, what is the most obvious play after seeing a hunt on external range liquidity plus a bearish doji candle? The next most probable hunt is on internal range. So as you can see right here, we have our internal range fair value gap. We have one here and one here. So this is our internal range, and as you can see, two bearish confluences up here. We then get two bearish weeks taking out this internal range liquidity. So this right here could have offered a potential entry point for swing traders, seeing how we closed on the weekly. So you could have gotten off the close of the weekly, targeting internal range right here, stop loss just above the previous weekly high. And as you can see, that would have been a beautiful 2-week swing trade, and you would have hit full TP. So that's how you could use this on the weekly time frame. For me, as an intraday trader, after seeing how we close like this on the weekly, I'm going to be dropping down to the daily time frame to match confluences. So right here, this was the sweep on the weekly, and as you can see, we also created a daily gap. Now this daily gap gets absolutely abused. What you can see here is we just plummet straight through this. We get an inversion on the lower time frame. This is a perfect entry model. We get our liquidity sweep, inversion, and then we start playing lower. However, this is the daily time frame. So now seeing an extra bearish confluence, I'm looking for closer targets. What could have been a great target here? This intermediate term low. And as you can see, price hunted this out perfectly. After seeing how price inversed this low here, inverse this fair value gap, the next most probable play is to have a run for external range, this sell side liquidity right here. Now we've got our targets and we have our confluences right here. We're going to be dropping down to the 4-hour time frame. And what do we have on the 4-hour time frame? Have a big zone of accumulation right here, still accumulating inside this inverse gap. And then we have our big manipulation with this candle here to take out the whole accumulated zone. Sweeping liquidity right here. This could have been your potential entry as soon as price swept out this high here for a 4-hour swing trader. However, for me, after seeing this AMD model on the higher time frame, I'm expecting the lower time frame to now distribute to this sell side liquidity, and as you can see, that's exactly what we did. So after seeing that, all my higher time frame confluences are now leading bearish. So after seeing this manipulation candle here to take out all this liquidity, I am now going to be dropping to a lower time frame to look for entry. Okay, so looking at Euro USD on the 4-hour time frame, as there's not much structure on the daily, as you can see here, which is kind of chopping around, low volume. So the next highest time frame that I'm looking at for good probable reversals is the 4 hour. And the first thing that I notice, we have a slight downtrend followed by a doji candle here and a sweep of an intermediate term low. Also tapping into this fair value gap here. As you can see, perfect. Bullish confluence is matching, and we also did this at a key time. Notice how we got our hunt at 5 a.m. The next 4 hour candle is now 9 a.m. So 9 a.m. is very close to market open. That's when we start to see volatility being injected into the markets. So after seeing this, I'm extremely bullish, and then I'm looking for my bullish targets. After taking out all this liquidity, we then have this perfect target right here, which is our 4 hour intermediate term high. As you can see, we're resting inside of a fair value gap. So this is an absolutely perfect target. Now, dropping down to the lower time frame, having seen that the 4 hour is extremely bullish, we're now looking for any potential entry points. So, dropping down to the 5 minute, what is the first thing that I noticed? First thing that I noticed, 9:30, we then get our open low. What does 9:30 open low do? It retaps into the 4 hour gap. It sweeps out sell side liquidity, resting right here, and then we start to get a recovery higher, inversing this 5 minute gap. So now aligning this with my bias, I'm extremely bullish on the day. My target was this buy side liquidity up here. Noticing that price is also inside of a market maker buy model. As you can see, we've got our sell side curve right here. We've got our consolidation zone here. We then start to see our recovery. One more open low to sweep out liquidity, and then we get our distribution higher to complete the model. Entry as soon as price closes above this 5 minute fair value gap. Our stop loss would have been as soon as we get a candle closure below this gap, invalidating it. Target this 4 hour intermediate term high, and just like that, we have got a perfect winning trade. Now this trade was one of the most simple trades that I took last week. As you can see how the 4 hour time frame is extremely bullish. We have just taken out a massive zone of liquidity here, tapping into a gap, sweeping this low. That is then extremely bullish. We also did this all at a key time on the 4 hour time frame. As you can see, we did this at 6 a.m. giving us only a couple hours before market open to really start gauging volume. So as soon as I saw this on the 4 hour time frame, all these bullish confluences, that was enough for me to then go and find my entry point. And as you can see, absolutely perfect winning trade. So here I am on USD to JPY, and the first thing I notice is we get this slight downtrend here. What do we hunt out? We hunt out liquidity resting here. We also hunt out this low resting here. And we tap into this daily gap. So here we have a lot of bullish confluences. So what I'm looking for now are potential longing opportunities due to my higher time frame confluences being bullish. I can now head down to a lower time frame looking for confluences matching my higher time frame bias. Here I am on the hourly. First thing that I notice, we have this intermediate term high and we break structure with it, moving higher. We then see a slight zone of accumulation here. 15-minute accumulation, as you can see. We then got our manipulation lower to sweep out the whole range, tapping back into a 15-minute fair value gap and sweeping this liquidity. Then we start to see some displacement higher. Heading down to the lower time frame, looking for my potential entries, and what do we get? We get this strong zone of supply right here, created in the markets. This is where my potential entry would have been. As soon as price taps into this zone of supply, stop loss below the zone, with our new protected low after sweeping out all that liquidity, targeting higher price, and as you can see, we've got this swing high right here, and then we get an absolutely perfect winning trade. So as you can see how I'm using time frame alignment, the higher time frames holding higher power, we have all our confluences leading in one way, so then all we need is a lower time frame precise entry point, and as you can see, we get a perfect winning trade. So the keynotes for today's video are the following. The higher time frame holds higher power. So what are we looking for? We are looking for the weekly time frame to align with the daily bias, and then we are looking for the daily to align with the 4 hour. If the daily then aligns with the 4 hour, we're looking for the 4 hour to align with the hourly, and then if the hourly aligns with the 30-minute and the 15-minute, we're then looking for a 1 to 5 minute entry point. So I have covered plenty of entry points in this current playlist. So if you're struggling to find a good entry model or a good entry point, check some of these videos. So feel free to check those out if you're still a little bit confused. These are the keynotes for today's video. If you want to trade alongside me, where I do my top-down analysis every single day for free in my live trading Discord, feel free to join that. The link will be in the description below. But that's going to be all for today's video.